Good morning, members. It's LA and it's November 23rd, 2014. This is the weekly review where we try to take a look at what happened, what we think will happen, and how we try to take advantage of it. So that's both in terms of general market fundamentals and the portfolios. For those of you that are new, I do this weekly. I try to send it out Sunday morning before noon, my time. Which would be 2 o'clock Eastern time. And really, this is probably one of the more popular features where folks like to, catch up on what's going on, and I try to give you a good sense of what's going on. During a week, we can get so caught up in the minutia. Here, we can try to take a little bit of a, larger view, where we're going, how we're going to get there. So, without saying much more, let's pop into this and get started. The most important thing, I believe, that we can gather from what's happening is that we continue to see huge differences between the performances of these indexes. So, when we look here at the S&P 500, at the NASDAQ composite, these are big gains. Even here on the Dow, it's that way. But yet, on the small caps, not the case. I mean, this is almost flat. Last week was actually negative when everything else gained again. We saw divergence again this last week with respect to the NASDAQ and technology and small caps compared to the S&P 500, the large caps. And these are large caps, is also just more concentrated, but the large cap stocks here. So, even though the market continues to just churn on higher, there is underlying weakness, if you will, in those areas that you don't want to see weakness, especially this time of the year, because usually this time of the year is when the Russell outperforms. So, it's, again, one of those gnawing things that's out there, but you can't argue with performance, and the market continues to perform, and unless and until it doesn't, then we have to continue to believe that it will, and that really is kind of the bottom line. So let's pop in here and kind of look at the technicals, the fundamentals, and so forth. Rotation still is the name of the game, and we saw rotation again last week, and you can typically see that when it's starting to take place, in the sectors. And I'm thinking in particular of like the XLB, where this thing was one of the weaker ones, couldn't get going when the others were already skyrocketing straight higher, consolidated for a while, and then started to break out and money started to rotate to it. Friday's news, of course, is bullish for the materials sector in that China wants to expand again. Europe also, of course, is doing that, but China was the surprise. That is helping this sector, and the money rotates to it. Now, another sector that's starting to see the rotation is the XLE. XLE swing point high, goes up, test it with more volume. It's probably going to try to break out this week. So, as a market as a whole, very bullish, very strong, very, push, push, push. As that develops and things get pushed so high, people are going to start trying to go find something cheaper. And where better to go than, large cap, XLE, OIH. And that, I suspect, is what's going to happen. You also got an OPEC meeting this week where we may see a production cut to try to shore up the price of oil, which, of course, has been a large part of the issue here. Oil has just been going down, down, down. But even oil, as you can see, gets over this, into this swing point high, had some decent volume. This looks like it's trying to turn as well. I suspect we're going to see that rotation continue as a result of that. Another place that we saw rotation that we haven't seen for a while is emerging markets. Here's the EEM, swing point high, gets over it, has more volume, right? Bullish breakout. This one also looks to extend. And so when I'm looking at the rotation theme, these two areas are areas that maybe we ought to try to consider. Now, I'm not convinced that the EEM is going to go up all that much higher. You know, the money has been going into the U.S., not elsewhere. Now, maybe I'm wrong, and maybe the elsewhere is going to get the money rotation flows, but it seems like it's a better bet right now to probably bet on U.S. equities versus overseas emerging markets and so forth. So as we get farther in here, you'll see that I'm probably going to try to put orders into this space and increase our bullishness a little bit as a result of that. Getting back to the thoughts here, we are extremely stretched this week's Thanksgiving week, though, and that usually has a positive bias. So, with a holiday shortened day after Thanksgiving, that's extremely bullish usually. I don't know, crazy stuff goes on Friday. Maybe it's because it's Black Friday. I don't know what the deal is, but I expect that if we're going to get any kind of retrace, again, like we did last week on Thursday, it probably comes Monday or Tuesday. It's not going to come, Wednesday or Friday. So volume is going to thin after Monday. There's going to be hardly no volume. Markets can get pushed around. I would expect if you see any kind of weakness, it's probably going to come right at the beginning of the week. So far, this market has corrected by time, not price. And, that, in a longer perspective, that's good. That makes it much more bullish. If I go back and pull up like the S&P 500, and and if we think about, let's talk about this for just a second. If I pull up the S&P 500, when you get this kind of a run, we know it's not sustainable in terms of the angle, right? You can't sustain that angle. So what does it do? Well, it kind of flattens out a little bit. But the fact that it hasn't done this and certainly hasn't done that makes it that much more bullish. Why? Well, because when you set up an ABCD structure in this kind of a case, and the only one that's in play right now is here, the pullback is extremely small, which makes for what? Makes for an extremely high ABCD structure. And if you go look at that structure, it's huge. That structure points up, I think it was 2225. That's still a long way higher. And so, a small pullback when it comes versus a deeper one, right, makes for a much more bullish, longer-term picture. And that's what this thing has done. And so it's very hard to be negative on this market other than for a very short period of time, if anything. And so from that perspective, when you think about this, that's bullish. The fact that it works off the excess with a slightly bullish bias or a sideways bias like it did here for 5 days, that's a very bullish case. And it makes it a much more bullish case, and that's what we've had. And so from that perspective, we have to continue to think this market wants to work higher. Now, one thing that could be a problem is the dollar. We wanted to see it pause and consolidate, no fast move. That still, even though it's still happening, it's its own test this week. And if I pop up the dollar here, you're going to see what I'm talking about. Remember, we took some profits thinking that it would flatten out and probably get a retrace. Well, that news on Thursday night from China, from Europe, on more, rate cuts in China, more QE or the potential for QE, I should say, in Europe, spiked it over the highs. Now, note that there was no volume really associated with it, although it's hard to read the volumes here. We don't get enough still, on this proxy. But I don't want to see this push higher faster in terms of positive, a positive case for the equities. If it does, we're going to get volatility. So far, it's still kind of a range. It's just expanding the range potentially. But I don't want to see this thing push up much farther. I don't want to see it going, ballistic this way. If it does, it's going to be an issue. and it's going to cause volatility in the equities. So far that's a positive. We'll see if in fact it continues or not. What to watch for? I would be looking in particular is do we see this rotation continue? These swing point breaks, domestically, do they continue? And if I I already showed you the XLE, but if I go in and look at the Russell, the Russell actually, even though it was down on the week, it had a positive bias for the week. Friday, like tech, it sold off on Friday, which was a negative. But it did come down. Remember, it was testing. We had already had a break of this. That said, it's a range trade, right? We couldn't hold this. We got up underneath it and stayed under it. Then what did it do? Well, it tested the next one. That's the way these things work. Tried to break under it, couldn't. Got the spike back up. Got a spike up on Friday. You had volume on Friday as it pushed to the highs. I expect it's going to try to go right back up there and test it again. So these are positives. You want to see this Russell break out and start to extend up here to these prior highs and get over the swing point high, which it so far has been unable to do. This was a huge move. To consolidate here and then try to push higher, that's nothing but positive if it happens, right? And so that's what I'd be looking for. And then the other big thing is the SOX. The SOX were in that as a trade, and we got a nice big push on the SOX. Here we go. Got a nice big push on the SOX last week as it broke out. It gets over the swing point high. Now, the more concentrated SMH was already telling us this, and a lot of this was Intel, because Intel's a big factor here. Intel said, earnings are going to be better than we expect, and that pushed this SOX higher, gets over swing point high, has the volume. This looks to extend. If it does extend, it also has a nice big ABCD structure. You can see that one here, and that will take it up quite a bit farther. So extension, you want to see it push, push, push. We're going to try to buy a retest regen off this swing point high, and we'll get to that here in a little bit, but this is a very big positive. Keeps tech going. Where the big three in tech are struggling, Apple continues to push, right? Not a bad chart at all. But then you look at the others, the other three, right? Microsoft's struggling, and we know Google's struggling. So the big three tech are not pushing this market. It's the underlying tech. SOX in particular, IBB hasn't been able to break out yet, but if this one starts to go again, this will be another large ABCD structure, and this could also help to juice the technology sector despite weakness in the big three. So those are the main things I'd be watching. I'd be watching to see how those play out, and I'd be watching to see that fast dollar move if it starts to develop. If it does, that's going to be an issue, another week or two down the road. Dual central bank whammy, that was the fundamental positives. We've already talked about it. Also earlier that week, Japan, Abe says he's not going to increase the sales tax. He's going to push it out, and he's going to hold the snap elections, which people view as a positive. Fundamentally, the negatives, the economic data is really not that strong anywhere. That's why you're seeing the central bank action, right? I mean, you don't have it in Asia, you don't have it in Europe, really. They're trying to do something to cause that. The U.S. is the only place that you have it, so that's really a negative. And this dollar strength, continues to be a tax on our exporters, but a boon to consumers. And so it's kind of a cutting sword. It also can be a negative. Although I didn't point it out again, of course, to corporations that sell overseas. But so far, that hasn't been an effect. If the dollar does start to move fast again, and we've already seen a big dollar move the last quarter, I expect you're going to see that reflected in earnings come next quarter, middle of January when that gets around here. So a fast dollar move, I think, is going to hurt earnings. You can earnings, companies always have their balance sheets, their income statements such that they can, move things around. There's always some slop in there, and I'm sure they used up some of that this last quarter. If we see a fast dollar move, I don't think they're going to be able to hide it much longer, unless they have really good hedging strategies. The positives it's totally overwhelmed the negatives, though. These breakouts, these Russell looks to test again. The SOX is breaking out. You got end-of-day buying for the most part, right? The only thing we saw on Friday was we saw a little weakness at the end. That was what I was talking about here. So I don't see hardly any negatives. Technically the bonds are trying to peak higher, but not really do anything yet. The big thing for me is, this market still hasn't shown a failure yet on a daily chart. The only ones that we saw, if we pop back and we use the S&P, which has been the strongest of the indexes, the only thing that we saw were two possibilities. You saw one here, where this was an over-under situation. It was fairly extended, but it was over-under and it was young in the move. The better one was right here, and it did give us a one-day retrace, which set up the large ABCD structure. But since then, we had two opportunities, this one being the best, and all they could do was manage one-day pullback. Did a retest regen and just took off. So it's very hard to look at this technically and say there's anything wrong with this market. It just isn't. And until it is, we just have to believe it's going to go higher. There's really nothing else you can do, and we've got to keep finding ways to try to participate, which is what we've been doing over the last 2 or 3 weeks. So negatives are certainly outweighed by the positives, and now you got emerging market strength to boot. World markets are starting to look stronger. So when you look at all of that, it's very hard to be negative here on these markets. Economically, a lot of data this week. We had a lot last week. We got a lot more this week. It's loaded. You got an OPEC meeting on Thursday. This is a week of a lot of data in a holiday week that's going to see light volume. So we may see a very choppy week as a result of it. Geopolitically, really nothing, just simmering still. So what's the bottom line here? Last week we probably had the best chance from a calendar standpoint to get some sort of retrace. Monday, Tuesday, Wednesday, nothing, right? Just continue to push. Thursday got the drop, gap down, 0.5% or so, immediately bought. It's almost as if they knew what that news was on Thursday night in Japan and in Europe. Push it higher, and then you got that weak close Friday on the tech and small caps. So, when you review that, think about that. Yeah, they gave us that pullback, and I thought it would be bought. Of course, I didn't think they would buy it that aggressively, but they did, which again tells us the market is extremely strong. And given the calendar and given the way the market keeps behaving, you have to keep thinking this is going to be a strong finish to the year. And I think that's what everybody's doing. They feel like they have to be involved, and it doesn't matter. They just have to buy, and that's keeping this market up and probably going to continue to push it up. There was this notable weakness. We may see a little choppy action this week as a result. That notable weakness tells me, hey, even though they want to buy this thing, they want to quote-unquote buy something cheaper now. And so the technology, the things that are really stretched there, they're trying to push their money somewhere else. And they're afraid, right? I mean, small caps still aren't getting the money because why? Well, they're the ones at most risk if something goes wrong. They keep pushing money into things that are safe and strong and big. And that's why you see S&P outperforming, the Dow outperforming, the large technology stocks outperforming like Intel. They have positive action. They're paying dividends, XLP. That's where the money keeps going. Divergences, yeah, we've had that, but it looks to me like that's probably 1st of December before we're going to see some sort of a serious retrace. We may see choppy stuff this week because of light volume and the way it closed on Friday, but this week to me it looks more like consolidation with an upward bias. If we look at the portfolio here, last week we took some profits on a strong dollar trade and then it broke out, so we may have actually hurt ourselves there, but we did add a couple more positions, TLT and XPI. I really want to just, you can read through all of this. I want to highlight the ones I've got here in yellow and kind of go through those because I've got too many positions to try to go over them all. My thoughts are here in terms of what's going on, but I'm also looking at the OIH, XLE. I'll probably have an order in that space tomorrow. Probably we'll just stick with the indexes given how far we've already moved up, but I think that money's going to rotate there, and that's probably a place that we can play. Let's look at the 2 or 3 things here that I have highlighted and just talk about technically the sorts of things that I'm usually looking at and trying to take care of. So let me find the portfolio. All right, here we go. So TLT. So what's the trade here? Well, as this market gets more and more stretched, one good way to hedge it without hedging in, as short of the market itself is to step over to something that should run counter to the market to some extent, which is the TLT. Now, the reason for this is right now you actually have a huge high volume top. I mean, it was a huge spike up. Now, I don't expect it to get back up there, but I certainly expect this area to get tested. And we're seeing sort of a rounded bottom start to take place here, right? Where they just don't want to sell this off. It came back into this high and there was another one over here. So it's doing a retest regen on this time frame, and it wants to push back up into this resistance zone, which is the bottom of these 2 bars. That would probably be the place, more than likely, we'd want to try to take some off. And I expect we'd see that fairly fast if it gets over the swing point high. So this trade is a trade that says, hey, more than likely, even if the equity markets don't pull back, this thing's probably going to reward us. And if the equity markets do pull back in some sort of a fast move, then this one's going to shoot up. And we're going to get an even higher price point out of it, right, up into this area. So it's kind of a win-win situation, a way to play opposite of strong equities without a lot of risk. Matter of fact, it's pretty hard to lose on this, I think, over time. So that's the TLT trade. That's why we got into it. And that's why we took, a fairly decent-sized position in it as a result. If I look at another one here, PCTY, we took some profits on this, if you remember back. It was actually week before last. And then we were able to pick it back up into, and this is what you're trying to do on these trades, we were able to pick it back up into this strength area as it came back in. So we sold out, picked it back up, and now it breaks out, setting up another ABCD structure. And that structure, in this particular case, let me see. So you had the initial one from here, right, which actually is just about done, a little bit farther. And then you have kind of a nested one that took place here that finished. Now you got the pullback, and so you're looking for this one to finish off. Right now I've got the order. The original order was at 32. That was, that's our original target. We actually have a decent sized position now, 4.5% in this. If we can push up to the 32 area, I'll take money. If we push up shy of that and then start showing some sort of topping pattern, then we'll try to take some money there and again try to buy it back cheaper. But what you're trying to do with these stocks that show all these positive characteristics, right, is you want to get into these. Of course, this was a negative one, but you want to get into these, sell some, buy some, and you try to increase your size in the position. In other words, we started out at, I think we started out, if I remember right, at like 3%. Now we're up to 4.5%. You want to increase your size as it continues to work higher until, the longer term characteristics don't look worthwhile. And if we look at those still look worthwhile here. Remember, this is a young gun, got its breakout. This is a range trade breakout. Okay, it could take it to 35.40. So, you know, it's one of those trades that we try to get into and work, and this one is working. Now, one that didn't quite do it, and I didn't highlight it, but I want to look at it real quick with you anyway, is MFRM. This was the same thing, another young gun, got its push higher. Now it's starting to show weakness up here. It never gave us the retrace to let us get in, but it probably is going to now. So what we just saw on PCTY is what we're trying to still do here on MFRM. Get a retrace in, try to buy it. Where's that area? Well, the key area here is the retest regen, and whether it gets back this deep or not is going to depend on the market. So we'll have to keep weighing it. I'll keep juggling the order around because it's possible it's only going to get to here, but it also could come all the way back to here, so we're just going to have to measure it. But the fact that it went up here and then tried to get up there Friday and turned around and sold lower makes me think we could get it all the way back here. And so what we're going to try to do is just keep measuring it and get back into it and do the same sort of thing that we're doing PCTY. Okay, so that's that. And the last one I wanted to highlight was Zeltiq. Now this one has worked like a charm. Again, this is another young gun, but we've been in this one for a while. We saw a big spike up. Let me pull this over on earnings. Now, our original position on this we took back way back in August. So we were in way back here somewhere. And, excuse me, August. We got in back here. I'm on the weekly chart. I was thinking I was on the daily. So we had written this once before and then eventually sold out as it dug deeper, and then we finally got an earnings pop that told us we should try to get in, and we were able to get in at I think around $19, $20, somewhere in this little pullback in here. And then we got this nice big spike up, right? So we're sitting at 30. We've already got a 40+% gain in it. And this has the potential to make a large move higher on this time frame. So if we're looking on the daily, the weekly, ABCD structure points to a much higher price point over time. But it's going to take a while probably to get there. That's a $25 move. Added onto this gets you up to about $45. Now go back to the daily. On the daily, we actually had the push up. Volume here 718. You had another push up 710. You got towards the top, couldn't get over it. You can see kind of the heavy trading that's taking place at this price point, right? You've also got ABCD structures here, and let's point these out. So we have this one from here to there, back down and back up. Okay, where does that project to? Well, if you do the numbers on it, let's just do them together. 22, 33, you go 27, so you're basically 5 points. 5 points on this gets you up to 29.81. Where are we at? 29.39. We're almost at that area. That tells me that more than likely we're going to see some sort of a retrace here. And when you see something like this, you know, where it's already broken out, done a retest, regen, and held here, a lot of consolidation in this area, I suspect we could sell it or even sell it here and get a retrace back into here because this has a lot of volatility. It has a high beta. So sell it at 29 and change, back in at 27 or so. That's the sort of play I'd like to try to make with this. I don't want to do it on a large percentage, but on some part of it. And so, you know, that's the ideal here. That's why there's an order in for this to try to take some money. The rest of these positions, you know, as you know, we're doing well on all of them. The only problem is that we don't have enough of them, which is always the problem when the market goes straight up. So you keep working it, and you make your money while the market kind of, you know, churns up and down, although this one is churning with an extreme bullish bias. Okay, I've spent a lot of time here. I don't want to spend any more. I'm giving you my thoughts here. I expect this week to be kind of choppy. Bias is upside, and we got to continue to have the upside bias. And until that changes, we need to continue to do that. At some point, especially if we get it either this week, 1st of December, whenever, if we get any kind of a retrace, we're going to try to jump in and buy some stuff and pull our percentages up a little bit higher. But at this point, you have to just keep thinking this market's going to continue until there's failures, and there are no failures yet. And so until we see that, we're going to keep trying to inch in, buy things like we did with NXPI when we have an opportunity, and keep moving our orders around, going into things that they're going to rotate into, and trade that way to make up that performance that we didn't have as a result of being a little bit underinvested when this thing just did its V-shaped move again. Okay, that's where we're at. I thank you for being there. Folks, have a great, if you're domestic here, have a great Thanksgiving. Be thankful for what you have. All of our lives could be certainly a lot worse. I mean, if you just think of the world and the conditions that a lot of people are in, most anyone that's hearing me right now, I'm sure you have a lot to be thankful for. So, I'm thankful for being able to do the things that I want to do with my life. I'm sure that to some extent you are doing exactly what you want as well. We're all living pretty comfortably, in the larger scheme of things. And, we have a lot, to be thankful for. And I know that, when I get together with my family this week, we'll be talking about that, and we'll be chatting about, all the great things that have happened in our lives, and, our opportunity to help others. Reach out and help somebody. It's a good thing. It always comes back to you. Have a great week. I'll talk to you as it gets going. Thanks.